What's going on, everybody? Can you hear me well? Just want to make sure the audio is good and at least you can see the screen. Seems like a 30-second delay or so. So I know there's probably not going to be a lot of people on here. Brian, good to see you, brother. Always love your support. I'm just kind of going off of a whim today, to be honest with you. I mean, it's not going to be too long, but I talked about it on the live stream this week. I thought it was a good idea, especially if your Q&As, if you guys have questions. I wanted to do a psychology kind of live stream. I didn't have the time really during the week to do it, especially on the live stream. But for me, I like to go back throughout the week and review price action and try to view it through the lens of what I was thinking in the moment. And that's why I love live streaming, because even me, I've gone back and looked at a few of my live streams this week and try to really analyze what I was thinking in that moment and what I was talking about. Of course, with live streaming in the chat, I was talking about things that weren't really even relevant to price, which, if you guys were watching yesterday, right, that was yesterday, Friday, I took 2 losses, and the second one really, even after the session, really ate away at me, and it really just irritated me, to be honest with you, because it was a really small error and a mistake, and I've tried to pinpoint a lot of the areas and weaknesses that kind of unfolded, which I think Friday typically I've journaled in the past before. If it's been a really volatile week or something where I've had to really exercise my patience, and it's been a difficult week in terms of price action, especially on Friday, I'm very fatigued. My focus is not there. It's not 100%. Each week's a little bit different. It depends on the week, but typically Fridays I'm pretty drained, and I know that going into it, especially with live streaming and publicly being out there and answering questions and all of the things that come along with being a quote-unquote influencer, it does drain my focus. So yesterday I had a loss that I just was way too tight on the stop management, and I even said that in the video on the live stream. If that was in a real setting, I believe I would have went back into the market because my analysis was still 100% correct. And I'll show that, but I just didn't want to do it in front of other people because I don't want to set that influence on other people, nor do I understand that there's a lot of people watching, so I don't want a lot of people entering in the market and obviously getting upset if something went the wrong way. But that's one of the things I'm going to go over today, at least on my own journaling, and I'll show you guys at least how I would journal as a newer student. And then if I can dig into some psychology stuff, I have a bunch of notes from the mental game of trading that I could go over. And if you guys have particular questions, things that you're struggling on, maybe I'll be able to lend my own experience and insights to help you. Let me look at the chat in here. I know there's only going to be a few viewers on. It's a Saturday. People are off doing their own thing. Good to see everybody in here. Hey, bro, where do I go to learn all? If you're learning in terms of ICT, I mean, you could just go to his YouTube channel, and I would start at the 2022 playlist and then kind of go from there. Everybody has their own way of going through his content and digesting it. He does have a video over it recommending which videos to watch, but I think if you kind of just explore yourself and see what works best for you, that can help as well. Of course, Heidi. So what I'm going to do is I'm going to break down the week, and I'm going to go back through price and look at it through the lens, of course, hindsight, and see, all right, where could I have done better? Where could I have positioned myself? But the key thing to do when you're back testing is not to put a lot of emphasis on, like, man, beating yourself up, really. I think that was a huge mistake that I made throughout my journaling and a lot of things that I've done throughout the years. I was so mean to myself in my journals, and I have old journals where I'm not going to show it, but there's a lot of negative self-talk, a lot of just, basically being super self-critical. And that, I've talked about this before, that's going to come out in your own trading. You can't be very self-critical in your journal because that's going to come into your reality when you start trading, and you have to be your biggest cheerleader. Even if you've made the biggest mistake, you've blown, you know, your 10th account, let's say, that week, you still have to be your biggest cheerleader and try to find the absolute most positive things and uplifting, basically wording that you can use, because it's one thing that ICT stated that really resonated with me, and I made a switch last year in my journaling to really emphasize on that. As far as journaling, there's a lot of paid things that you can pay for, which I do recommend. It's an investment. Um, there's tradezilla.com, which is really good. There's Edge Wonk, WONK, which is pretty good. I think that's probably the cheapest overall, and it's still really good. If you want to go a free route, you can create a free Telegram chat, which I'll show. I just created a free new one just so I can show you what I would be doing. And then Discord's another one. WhatsApp. There's a bunch of different things that you can use to journal. But the main focus of journaling is putting down there's a technical side of journaling, and then there's the psychology side of it. So the best thing to do is to journal that day if you can. If you have enough energy in you, because all of that is fresh in your mind. All of the emotions, all the thoughts, everything was fresh in your mind. So you're able to really write it down and pinpoint, what was I thinking, what was I feeling. Those things are really important in terms of the emotional side. Technically, if you record your sessions, which I recommend even in private, I did this for a long time, just record your own sessions in private and keep it away in a file and basically date it. That way you can go back and be like, to me, I'll talk to myself during the session if I'm alone, and I go back and review and be like, all right, what was I talking about? What was I thinking? Those things are important. NQ, as far as the technical standpoint, everything's been playing out beautifully to what, if you've been watching my day logs, you've been watching everything that I've been outlining. I mean, I've been calling for all-time highs, even the beginning of this year. Not to brag or boast, because being right on analysis means nothing. Profitability being that is very key. This week was hard, man. This week was very difficult. I can't even lie myself. It was basically a break-even week for me. I had one trade on Tuesday on the live session, which was about 50 handles, and then yesterday we had 2 losses for about 30. So overall, it was basically a break-even week for me. Even though this is going to happen where you can find the draw in liquidity, it's super easy, but the intraday entry patterns are so difficult. I mean, the New York session, by the time we got to it, London already moved on Thursday and even Friday, overnight, almost over 100 handles. And when you come into that type of session, it's the majority of the move has already happened. And then you get into the New York session, it's just sideways, choppy, manipulated price action, and it's really difficult to navigate. So let's review this week and start with kind of Tuesday. So we were coming off of a shortened week, which was a holiday. We had Martin Luther King on Monday, so we had a shortened week. Those type of weeks can be difficult as is. Would love your opinion on risk management to use for a beginner challenge account. Emmanuel, what I would recommend if you're talking in terms of a prop firm challenge, I'd be risking, this depends on your approach and the way you want to do it. What I would recommend is for challenge accounts, if you have enough data to back you and you're confident in your system, I would be a little bit more aggressive on the challenges, personally. And I hear a lot of the people that are even above me in terms of profitability, like Jade Cap. He does the same thing. He's talked about being a little bit more aggressive on the challenge account, because you don't want to be spending a whole lot of time on them. You don't, to me, spending 6 months on a challenge account, if you do get it, I mean, that's great. But you did, utilize 6 months of time. That's a lot of time to utilize on a challenge account. Versus if you can speed it up with a little bit of risk, and then get the funded account and then dial it back. But if we're talking about a funded account, let's say you have $100,000 and let's go off of a Forex prop firm. Their max drawdown for most of them is about 8%. You want to divide that 8% up into a significant chunk. So for me, I would be looking at, just starting right off the bat, is probably 0.5% risk. if not 0.25% risk, so a quarter of a risk. So that would give you, if you're doing even just 0.5%, that would give you about 16 trades to blow your drawdown. If you have enough data, you shouldn't be able to lose 16 trades in a row. And if you cut it down into a quarter, that's going to give you approximately probably close to 30 trades to blow the entire drawdown. So 30 trades, you would have to lose 30 trades in a row to blow that entire drawdown. So that's if you keep that consistency. For me, if I was in a, when I am in a funded account, you build that drawdown, you build that buffer away from the beginning initial balance. And once you're able to do that, then you can start upping your risk a little bit more. Anytime you lose, you cut your risk in half and you dial it back, because that's very important. And as soon as you're able to make half of your loss, your previous loss back, then you can start upping your risk again and start inching towards it. You're going to see throughout the live streams, even me today, in terms of journaling, I wanted to journal about being in front of people live trading, because there's another element to it that obviously I'm aware of, but wanting to be perfect in front of others is a huge thing. I think that was yesterday, semi-reason why I lost, and I kind of, I trailed my stop loss way too tight, and in hindsight, I'm like, why would I do that? That was stupid. And again, that's just another element that I'm trying to deal with trading live in front of people, which I do love, and I signed up for it, so I have to deal with it, and I have to figure out how to work with it. So, let me look at a few questions in here. I know I can go off on a rant, so please catch me if I do. Please share your view on trusting to re-enter a trade immediately after a loss, especially when you think the setup is still valid. So, I mean, this goes literally with the trade yesterday, and I'll review it. So we go down into a 1 minute here. I first had a loss in here, which I was trying to short. And this is one of the losses that I wouldn't have changed anything. There wasn't anything in here, even in hindsight. I was perfectly happy with the loss. I even in hindsight, looking at it, there's nothing I would have done differently. And those are the type of losses that I'm perfectly okay with, because I followed all my rules. I did exactly what my system tells me to do, and I followed it. But when I follow my system and I, as a human or the user, make the error in my system, that's when I get upset, because I know that's a point where I can improve upon. And this is where self-criticism, I'm super self-critical of myself, like to a point where it's extremely negative. You have to catch that. But I was beating myself up all day yesterday over this, and even today I've been reviewing it. I'm like, man, why the hell did I do that? But going back to your question, is yesterday I took a loss in here where I was trying to short, and I was in the understanding that we were overall still bullish. We were still inside of a bullish dealing range, but the relative equal lows, and even over here, I was seeing if we could just take those out, just as a short-term scalp. Even if I was only able to get 20, 30 handles out of it, that still would have been sufficient for me. And then if it expanded higher, then I would have been able to look for something different. So to your question, this is what happened yesterday. If I reel it back in here, I was calling for higher prices in NASDAQ and Q, because I could see after I took the short loss, I didn't go back into the market immediately. I let the time kind of just process for me. As soon as I started to see an expansion higher, at the moment in time, I was fairly certain we were going to head towards the buy side liquidity at 17,255 approximately. And I saw this displacement higher with a bullish order block, which is not typically my entry pattern. I don't love entering off of order blocks, especially on a lower time frame like a 1 minute. But in the real time, I went back in the live and I was trying to figure out what was I thinking and what was I looking at. At this moment in time, I was expecting if we just dip down into this order block, we're going to expand higher into the buy side liquidity. Now, if I do a little dual chart here, and I go back to yesterday, this is where we were at on this one. So hopefully it lets me do this. Okay, cool. So this 5-minute was the parent order block. And if you look beneath on a 1-minute time frame, this is our dealing range from this low up to that high. Now, even if you're able to enter at, let's say, this order block, my stop loss should have went beneath this low in here, because it should have went beneath this parent order block, and it should have went beneath at least another PD array, which was this fair value gap down here. And it should have went beneath this parent order block. But I was reviewing it and I was kind of questioning, okay, why did I do that? Why was I not comfortable with a larger risk? Well, it kind of made sense. What I was kind of looking at was, if my entry was here and my stop loss was down here, and all I could see for the session, of course, in hindsight, I could see the whole day expanded hugely, but in real time, all I could really see was we were only really going to target that buy side liquidity pool there. So my risk to reward was less. It was less than even a 1-to-1. So I could see why my stop loss was here and it was so tight, because I was viewing it from the frame of a risk to reward. And I was seeing, well, I don't really want to risk more than I'm trying to gain. And I didn't say that in real time, nor did I really even think it, but I know subconsciously that's what I was doing. So I entered in. Let's see if I can play this out. This is what I did. I entered in here, and my stop loss went beneath this order block. Now this is where just having too tight of a stop loss management sometimes gets you killed. I ended up getting stopped out, right? But if my stop loss was beneath here, I would have been protected, because all we did was we dropped down into this fair value gap. We didn't quite meet it, but this order block was really the parent. So in here, I still would have been protected. And to go back to your question, if I can clearly identify without emotions, and I know that's a difficult task, how to re-enter the market, if I see that I personally made an error where, okay, I was just too tight on my stop loss, everything's still valid. Nothing invalidated the idea. And what would have invalidated the idea of me, getting back into the market? Well, if price traded beneath this low in here, then I would have had to obviously exit out of the trade. Re-entering into a trade idea that you personally mismanaged, it's all unique. It depends on the situation, but you have to look at what invalidates a certain trade idea. And typically that's when it stops respecting the PD arrays that you're on side with. So if it stops respecting bullish PD arrays, then obviously your trade idea is invalid. You have to look for invalidation points to really understand where you're at, if that makes sense. And I'm just reviewing this for my own sake. But in here, if I wanted to re-enter, I could have immediately re-entered in here. And I said it on stream. If I wasn't live streaming, I probably would have done it, because I just understood that it was a human error. But live streaming, there's a different element that I'm trying to work out in my own psychology, where I'm not trying to influence people to do a lot of trading. I'm just trying to keep it maybe 1 to 2 trades in a session. I'm not trying to influence people to do a lot. But in here, I could have re-entered. My stop loss would have went beneath this low there, and I would have just held onto the trade. And ultimately, it would have went to the target. So it is what it is in those situations. Typically, they only last about a day or so until I get over it. If it's something like this where I'm like, man, I'm really beating myself up. And this is where I'll go back into my notes from the mental game of trading. And really that has to deal with perfectionism, where you expect yourself to be perfect all the time. And it's a false bias and illusion that exists within your mind, where you're expecting yourself to be perfect all the time. And unfortunately, as corny or as ironic it sounds, you can't be perfect all the time. It's impossible to do so. And expecting that is going to get you hurt way more than if you just allow yourself to deal with the idea that, you know what, I'm going to miss a lot of trades. I'm going to make mistakes like this probably pretty often, especially as a newer trader. And I think for me, that's where it beat me up, is like, I'm so experienced to the point where I shouldn't have made that mistake. I should not have seen that. But that's where the false bias and illusion resides in my own mind, is even as experienced as I am, these mistakes are still going to happen. And it sucks because it's like a reality you have to deal with, is, you know what, for the rest of my career, I'm probably still going to make mistakes. I'm going to do these stupid things where I'm just unfocused that day. I'm not, dialed in as much, um, because we're humans. We're not robots. And it's a part of the game that we signed up for, is I have to deal with that reality, is I'm going to make these stupid beginner mistakes every now and again. And if you can limit that and you can track how often you do it and see the progression within that, that's where the real progress is tracking how frequently you do these small mistakes, or whatever mistakes you do. If you can start to reduce that frequency, that's progression. That's something that you can at least track, and you can be proud of yourself for that, because you'll never reach a point where you don't ever make mistakes. That's a complete false lie that you probably believe, or you don't even see that you believe. So, um, Danny, good to see you here, brother. Let me look at the chat. Um, Basically, when you have a funded account, you are not trading the 100,000. You're trading your drawdown, your risk. Yeah, exactly. I mean, you are the people that say that, when you get a funded account, you only have, like, let's say, an $8,000 account. That's not true, because the pros of prop firms is you get that leverage from them. Because if you only had an $8,000 account and you try to put on the contract size, or the lot size that these prop firms allow you, you couldn't do it. You wouldn't have enough leverage or margin to do so. So that's the pros of these prop firms. Even though you only get an $8,000 drawdown, it's not an $8,000 account, because you could not do that same amount of leverage as you do in a real broker. They wouldn't allow that. There's not enough margin or leverage to do so. So there's pros and cons to it. And I think no matter what, even in a live account, you shouldn't be drawing down 10% in your live account unless you're extremely experienced and you're doing a lot of leverage. I mean, maybe that's doable, but in a live brick and mortar investor mindset, you should only be drawing down 2 to 3%, maybe a little bit more, but then you should be willing to crawl your way back through it. Fighting through drawdown is extremely difficult, but a very good skill set. And nobody talks about that. It's always about profits. It's always about winning. But being able to go into drawdown and then crawl your way back and then get above where you were once at and then get into profit, man, is that a beautiful feeling. That is 100 times better than always being in profit, because now you trust yourself more. You have more confidence. You can see that, you know what? I was in drawdown. I was able to get myself out of it. I managed it perfectly. Those are some really good skill sets. Let me see. Found you by the chance, man. I'm liking what you're doing. CZ, good to see you, man. When you are live, you need to forget to be perfect for others. Yeah, exactly. I mean, that's something, as a newer live streamer, is I don't. I may say that, but it actually is maybe true. It's not that I don't care what other people think, because obviously there's some subconscious that I do, and I want to be, perfect in front of others. But the reality is, in trading, I'm going to lose, and if I'm going to lose, it's going to be in front of people. So it is what it is, and honestly, it's a good thing, because people need to see that. Everything on Twitter and on social media is only wins. Go through your favorite influencer and see how many times they posted a loss. I guarantee you, it's maybe like 1 to 2 losses every 6 months. So these people, they portray an image to sell you something. In order. Yeah, audit. I think that's what I try to portray as well. Is I'm only limiting myself to 2 trades in a session, because I know if I go beyond 2 trades, maximum 3, I know I'm destined to go into a tailspin. I don't see a reason to go beyond 2 to 3 trades in a session, because typically if I get 1 trade wrong, then I'm going to wait and see, okay, was I just simply offside? Can I get back into sync with order flow? And then if I lose again, then it just means, all right, I'm completely off. I'm not dialed in. Something's off today. The market may be, off. I may be off. So I just don't see the reason to go beyond that. And I mean, that's just me personally. You have people that are on the seconds charts doing 15, 20 trades a day. I just don't see how that's optimal. I don't see how that you could possibly be profitable over a long period of time doing that. So, I mean, that's just my personal opinion. Yeah, Ross. And that's where, like, for me, calling certain draws on liquidity, it doesn't mean anything to me. Like, it's cool that I'm able to, like, from here, even last week, I was calling from this low that we're going to attack all-time highs. But I've been able to participate in very little of it. If I was a swing trader, then maybe I would have been able to participate in this entire move. But that's just the style that you choose. I can't just be nitpicky and be like, man, well, now I need to switch to a swing trading approach. I can't do that because I know my style. I know that intraday and scalping suits my personality best, and I have to take the pros and the cons with it. But going back, let's go over this week and where we started and kind of the bias that we're going into this week. So this was Tuesday. This was coming off of a bank holiday. And I was still very stubborn on the idea that we're going higher. I never left that idea. You can go back throughout my daily logs. I was 100% bullish on this. I never left that idea. And there was a lot of factors and reasons for that, even going back to the monthly time frame. I've been highlighting this inversion, fair value gap in here, and how the monthly power of 3 really played out this month. So beautiful, open, low, potentially setting the high of the month above the all-time highs there. Weekly, we were inside of this weekly fair value gap in here. So before the week even started, it's really what I was looking for. And then going into this week, I was paying attention to the inversion here. So this was the kind of main focus for me this week, and really paying attention to the CE of this level. So this week, to start off on Tuesday, I want to review kind of what price did and what I did and what I was potentially kind of thinking throughout the whole session. And this is what I do each week, is I go over the whole week, I go over price, I go over what I did, what I was thinking in it, and then you'll go, I probably won't do this because it'll be a lot, but what you'll do is you'll take screenshots, you'll plug it into something like this where you have a journaling, and you annotate the technical side of it, and then you annotate the emotional side of it. What was I thinking? What were my emotions? What did I do? If I did something good, then I'm going to highlight that. If I did something wrong, obviously I'm going to go in and say, okay, how could I have done better? What are the things that I could improve upon? Something that I've looked at this week that I really want to dial into next week is really the macros, because there was a few times this week that I was live on session and the macros played out beautifully, and it's something I want to work on, especially during the live sessions, is paying a little bit more attention to these macros. But rolling into Tuesday, coming off of a holiday and looking at this price action, I stayed out the entire basically opening range of it because I was aware that we were fairly highly manipulated. You could see that buy side was ran, and then you could see sell side was ran in here. And I didn't want to get caught up. I remember stating this throughout the live stream. And here, I was looking at the idea that we potentially could run higher because I was looking at the relative equal highs up here. They're a little bit higher than this. But I didn't want to get caught up in basically seek and destroy. If I go down into, thank you, audit. It's fine. It actually says 30 likes on my end, so it's fine. People here just enjoy. It's cool. But looking at the 1 minute, this is where I could have positioned myself better. And I emphasize the word could have because this is all hindsight. And it's not how things are playing out in reality. But in here, even in real time, I annotated this. I just didn't execute on the idea. We closed above this old SIBI. So we took out sell side liquidity, displaced higher above this old SIBI. And some people would have seen this as a 2022 model, where you take out buy side liquidity, you drop lower, and there's a fair value gap in here to short. And that's where narrative and intermarket relationships comes into play, which is hard to see in back testing. But this was letting me know that I shouldn't be shorting in here. And I disregarded the short, and I was basically standing on the idea that I only wanted to look for longs. But inside of that 5-minute inversion, there was a few areas where I could have done a little bit better. So refining that 5-minute inversion, there was the 1-minute inversion here. So if you extend that out to your right, let me do this. You have this premium SIBI there, buy side liquidity resting above us. After taking out sell side liquidity, price drops back down, I believe, into that inversion. Yep. So right where that 1 minute is the 5 minute, which the 5 minute is the parent. It's a little bit higher probability, especially have it in confluence in the same area. It's really good. So we reacted off of the premium SIBI. We dropped back down into the inversion, and the 5 minute here. This is where I could have went long, and I say I could have because that's hindsight. But I'm trying to improve upon myself. I'm trying to do, I'm trying to see where I could have done better. So in here, I'm going to see if it allows me to or not. Maybe it's just not working. Interesting. Let's say this is where I could have went long. With inversions, they're a little bit tricky as far as the entries and where I would place my stop loss, because it can wick through the inversion. So I'm not trying to trail it right underneath the inversion, because it could just wick underneath the inversion and the body close inside of it. So if I'm entering off of even a fair value gap, I'm looking at underneath it where there's a couple other PD arrays. So this is if you go to like a 30-second or 15, it'll probably be a little bit more clear. But this last up close candle is your bullish breaker, because you have a low, a high, a lower low, then a higher high. So my stop loss could have went at least to the mean threshold of that bullish breaker, or even a little bit underneath it. And I would have been targeting the buy side here. And then if I wanted to get, a standard deviation, I could have went from basically this swing, right? And I could have looked at where -1 is. Even negative 0.5 is a good standard deviation to look at. So I could have went long in here. Oh, well, I didn't know it was actually buying it. You could see how price could have wicked through that inversion. That's the reason why my stop loss would need to be a little bit higher. We get above the premium SIBI, and in real time, I was looking at this because as soon as we closed above it, I was fairly certain we were going to head higher. And I wanted to see, I talked about this in the daily log, if we could get down into that inversion. Let me adjust this real quick. So by that time, I would have moved my stop loss, but it's potentially where I would have put it. I wanted a price to dip into it, and we just missed it by maybe, I think, the littlest point or tick. Because if we dug into at least 10-25% of the inversion, I would have went long in there. And basically the same theory is if I'm entering inside of that inversion, my stop loss would need to be beneath a couple of bullish PD arrays. So there's a small fair value gap in there. Basically it would need to be beneath this last swing low, or at least this, right where that entry is. So if I was entering in here, my stop loss could go down there. And that's just for the idea, if you're in high resistance liquidity runs, it may retrace a little bit deeper than you're liking. And that's what I learned from yesterday as well. with my stop loss management. But if you want to look at what I did on Tuesday, if you weren't live, I remember there was a current new week opening gap and then the old new week opening gap. So we are looking at the buy side liquidity resting there, and we're resting underneath it. So there was a 5-minute fair value gap here, and I was anticipating just an IOFED with a breakaway gap underneath it. And the reason I was anticipating that is because price was in basically a rapid delivery. And to me, if it's moving or spooling towards a drawn liquidity fairly quickly, all I'm anticipating is an IOFED. I'm not anticipating a full retracement back into a discount or a premium. So in here, I went long inside of the IOFED, and then there was a small 1-minute fair value gap in here. So I went long in here, and then I targeted the buy side liquidity and then above the old new week opening gap. So I think I managed this perfectly. To be honest with you, I think I did everything perfectly. I was able to pull partials above this old high. We got above the old new week opening gap. I pulled another partial, and then I trailed my stop loss into profit before eventually I was stopped out into profit. So to me, that was perfect. I executed it perfectly, and the only thing I would have done differently that day is executing down here and getting a little bit longer pull or position in that day. So that's all I'm doing when I'm reviewing prices. I'm looking at, okay, where could I have done better? Where could I have executed better? And then going into me highlighting the macros, something I want to work on is just paying attention to the macros. So 9:50 to 10:10, this is Central Time, not New York. We actually had a news event driver that played out. There's a reason why you'll see this huge displacement lower in here. But still cool to study this 20-minute window and the velocity and the speed that unfolds during it. So hopefully that makes sense as far as you're going back through each day, seeing what you did, what you could have done better, even if you profit that day. How could I position myself even better into the market? And that's just me pushing myself, going back to perfectionism. It is a blessing and a curse for me because I push myself so hard to be as perfect as possible, and I do my absolute best to see where I could have done, basically with no mistakes. But that is a crutch because in real time and stuff, like yesterday or even in hindsight, perfectionism can lead to you tilting because you can be so upset with yourself that you didn't do something so perfectly that you start to tilt because you're upset at yourself that you're not perfect. So you have to watch for that. And you have to dig at those roots. You have to dig up, why do I expect myself to be so perfect? Why is that? And you have to find the false bias and illusions that reside in your mind over that idea. Let me go over some questions in here. Love the streams. Would you project standard deviations of a mitigation block or a breaker block for attic influence? Yeah, I think breakers give you a really good standard deviation. I'm not a huge fan of standard deviations. I've talked about this before because I think that standard deviations, they give you an idea or an area where price will draw to, but that's not perfect. To me, I would rather look at where is price drawing to, and that's where my target's going to be, because price or the algorithm is not moving off of standard deviations. It's moving off where the liquidity is and where inefficiencies are in the market. It's not moving off of a standard deviation tool. It just gives you an idea of where my targets could be, but to me, I'd rather look at the liquidity and inefficiencies. Are you keeping a long bias for next week? Yeah, I am very bullish on NQ. I'm looking for all-time highs, which ICT mentioned on his community tab yesterday that even for himself, we're kind of moving into uncharted territories, because as soon as you move into all-time highs, you have nothing else to refer back to. You have nothing else on the left side of the chart to where you can refer back to. It's just you're in no man's land. And I don't know whether to keep pressing, to keep looking for higher prices, or to just sit on my hands and do nothing. because I'm not trying to pick a top in a market where it's expanding into all-time new highs. So you have to wait for either enough evidence to go long or enough evidence to see where the top is forming, and I'm not trying to pick that. Brian, yes, the macros are fantastic, man. It's not that I've overlooked them. It's just sometimes I'm not paying attention in real time to what is to the time, really. I'm going to try not to get distracted with the chat. I know you guys have some questions, but I'm really going to maintain focused on journaling. I'll get to your question, FEG, as far as the dollar index. Yeah, Brett, I mean, for me personally, I don't do well in a very expanding market because I just don't trust it at times. When you don't have any runs on sell side, you don't have any deep retracements, it's hard for me to just try to keep longing a top or what could be the top. And that's just me personally, but all right, let's move into Wednesday in here. So Wednesday, if you look at the daily chart, this day it caught me off guard in terms of the deep retracement that we did have, but I was still standing on the idea of looking for higher prices. So I didn't want to shorten this day, but I also didn't want to long because the daily time frame it didn't seem clear to me. But in hindsight, I'll show you what I could have done, quotation could have done. So Tuesday, we took that trade. Wednesday and Thursday, I sat out, and then Friday, I had those two trades, which I was still very happy with, because I think in real time, this is a little bit harder to navigate. But if we look at the open of Wednesday, we had this SIBI here, sell side imbalance, buy side inefficiency. Right at the open, we rejected it and dropped off lower. And it was something that I wasn't particularly anticipating because I was still overall looking for higher prices. So I just didn't want to do anything. With that much buy side being above us, it made me extremely weary of trying to short anything. And that's where keeping narrative as your number one priority is important. Because if you start to just look at lower time frames, you get lost in it. And you only you're looking at entry patterns over narrative. So for me, narrative comes first. Time comes first, narrative, then you're plugging in your entry pattern to target a drawn liquidity, which is narrative. But in here, we sold off. I wasn't willing to do anything in terms of looking at sells. I had in real time the idea that, well, if I had enough evidence where dollar index wanted to move higher and all the indexes wanted to move lower, I remember this day they were all decoupled. They're all doing something completely different. So it made me weary to do anything. But I stated, well, we could shorten here, but I wasn't a fan of it because if you look at the 15-minute time frame back on Wednesday, you have the shift lower with this fair value gap in here. And I said, well, we could wait for a premium retracement to go short, but due to the factors of today and the higher time frames, I just wanted to sit in my hands and do nothing. But I'll show you in hindsight what could have happened, what I could have done, right? Could have is an emphasis. But I think this day was really clear, and I'll show you the macro as well. But on the 1 minute, we reached underneath the sell side there. And all of this was highlighted in real time. I just didn't execute upon it. And that's for a lot of different reasons. So, Frederico, everything that I'm stating is what I would be putting inside of my journal. And even for me, if I don't like to type, which I typically don't, I'll do a voiceover and I'll just do a video over price action that week and what I did right or wrong. And this is the process that I'm doing. And it's exactly what I would recommend is going through each day, seeing what you did. If you didn't do anything, what could I have done better? How can I improve upon it? If you did something wrong, you know, don't beat yourself up over it. Just cheerlead yourself. Say, you know what, you're human. You can do better. Um, encourage yourself. Those type of things. Journaling, I never had an issue with that. I've never had, I guess, and I'm not saying this to be rude. I've never had questions over it because it's always just made sense to me. It's just reviewing your performance. That's all you're doing. You're reviewing your performance. You're seeing what you could have done right or wrong, or what you did wrong and how you could have improved. It's that simple. It doesn't need to be rocket science. I don't know what people are saying out there, but to me, it's always been simple. Even from the first few months I got into trading, I was always doing the same process. So in here, knowing that we reached underneath sell side liquidity, let me open this up, and that I was still overall bullish. For me, picking a bottom in here, it's the reason why I didn't want to go long. It seemed a little bit lower probability. But if this thing was overall still bearish, I could have went long in here just to target right above equilibrium and target into a premium before if this thing started to sell off in here. So this is our premium up here, and then underneath that it's discount. So even if this thing was still overall bearish, I could have went long in here. You see, drop down into, this is our bullish breaker. We have a low, a high, a lower low, then a higher high. So this last up close candle is your bullish breaker. Fair value gap underneath it, rejects off it beautifully, displaces higher, drops down into the breaker again, and then we have a small fair value gap in here. And really what I'm going to highlight is this macro that I definitely could have taken advantage of. So we have a shift in market structure there. So I'll annotate all these shifts in market structure just for some people. But really this is the change in state of delivery. Right? If you want to focus on the fancy terms and words, people are going to throw that out there. But change in state of delivery, breakers are a very good way of looking at a shift in momentum. And I'll keep it that simple because you can see as soon as we got above the breaker, respected it, shift again above this old high. Even right here, I could have went long there, but this paired with the macro is a really beautiful entry. So from this time window, from 9:50 to 10:10, 20-minute window, end of the silver bullet, I could have been targeting this premium SIBI paired with time, paired with the idea that we're dropping down into this fair value gap here. Beautiful. So I could have took a partial out above the buy side liquidity, which is here, that old high, and then partialing out or finally taking my full profit at that premium SIBI right at the end of the macro. So to me, that's where I could have improved upon on this day. I think I really could have taken advantage of this. And this is all hindsight because in real time, I was still kind of on the ideas, well, does this thing potentially want to move off lower? And I didn't want to get caught trying to long something when it was overall going to drop off lower. Because this thing easily on the flip side during the macro could have sold off because at that time we're inside of a premium. If you look at the 5-minute, 15-minute, we were inside of that parent fair value gap in here. So in hindsight, everything's easy to look at. And all I'm doing is I'm just saying to myself, well, this is where I could improve upon in the future. Doesn't mean I have to, but it's always good to go back and see where you really could have taken advantage of something with your knowledge and your skill set. But it doesn't mean that you're always going to. Let me look at, so hopefully that makes sense what I'm doing, and you know, I'm just going back through what I was thinking in the real time, what I could have done differently in hindsight, and that's all I'm doing. Can you show the, I already went over that. I feel the same on Friday. I felt weird to jump into the trend and longing even higher, unfortunately. Yeah. No, you need to have um, this on. You need to have that on. What rules do you follow when determining the direction you're going to trade the silver bullet? I mean, there's a whole bunch of rules and things that I follow. It's not just one thing or a set of rules, because each day is unique in it of itself. The template is unique. The profile, the liquidity, the narrative, the higher time frame, it's all unique. So I know that's not going to answer your question, but something that will help is sitting down during a live stream and watching me kind of delegate the decisions and what I'm doing. You'll see the pattern that I do. A lot of it is intermarket relationships and looking at higher time frame. So that was Wednesday in a nutshell, and that's all I would have done in hindsight, or where I could have improved upon. And kind of to add into all of that, if you look at the 5-minute structure of it all, this last down close candle, you have your bullish order block. You have a small fair value gap in here with this old SIBI that we closed above, which will act as an inversion because we closed above it. So that's in confluence and support. You also have this down close candle, which is your bullish order block. We displace off higher, and then you IOFED this 1 minute or this 5-minute fair value gap in here to drive higher. So that was the 5-minute order flow, which is still beautiful. Do you trade the PM session? No, I do not. I just stick to the silver bullet. It's enough for me. I think if you, the more times, it sounds so basic, but the more times you're in the market, the more times you try to put your account into the market, the more times you're at risk to lose. So I'm trying to keep things very minimum. I'm trying to take as little trades in a day or a week, and I'm trying to trade as little as possible. Some people may say that it's not enough. You can't make enough. There's more than enough to make within a silver bullet window than you could possibly imagine. If you look at Jade Cap, you think he's such a great influence on the community. I wish he would do more. Maybe he does in his private, but more teachings. At least technically, because I think that dude's obviously he's withdrawn $1.2 million, but he stated before that, I don't know if this is correct or not, but I believe he said he does even a 0.5% in a week, which is technically, that's 2% in a month, and he's outperforming 95% of the industry. So you have to take that from the lens of people telling you shooting for 4, 5, 6, 8% a month, while this guy's making 1.2 million, aiming for 0.5% in a week. So I think if you lower your standards and your expectations of yourself, and you get consistent with that, even shooting for 0.25% a week, 0.5% a week, starting there is a fantastic start, because you can find traction, you can find confidence within yourself and in your system, and that's what's going to give you that, that drive, that momentum. Yeah, Brett, I doubt he's going to do that. To be honest with you, I highly doubt that. To be honest with you, I think he will be trading a lot before the session. There's a lot of times that he'll be taking trades probably before the open. Just knowing him, taking it at the open, and he's going to be pyramiding. He's talked about in our private group back in 2021 how to win the Robbins Cup, and it's basically having a 4.5% standard risk, and you continuously keep pyramiding on it. It is a savage way of pyramiding. I mean, he's done the calculations. He's been prepping for this for I don't know how many years, probably his whole career. He knows exactly what he's doing. I have no doubt in my mind what he's going to do. People are going to be mind blown by it. To me, it's nothing less than what I expect from him. Let's move into Thursday. Thursday, I hands down perfectly executed this day. I was ecstatic about this, to be honest with you, because I was able to determine that overnight we expanded a lot, and with intermarket relationships, I was able to navigate how the open was probably going to be really low probability, even though that we were extremely close in proximity to the buy side liquidity. I know my old self would have been trying to push this day so hard, because how close we were to the buy side liquidity, because we were very relatively close to the buy side liquidity. But on lower time frames, I could tell that overnight we expanded a lot. I believe dollar index was basically consolidating, not giving me enough evidence. I believe YM and ES were completely decoupled away from NQ. So that's me being very happy, and in your journal, or me speaking like this, I'm congratulating myself because I can see with progress and experience that I couldn't see this before, but now I was able to see this in real time and go back to the live stream. I was able to tell everybody this, and that's where I congratulate myself. I give myself a pat on the back. I say, you know what, man, that was awesome. That was beautiful. Because for me, when I'm able to see that when I should stay out of a market condition and it plays out beautifully to where I'm like, man, I'm happy I didn't trade in any of that. That to me is so much better than being able to enter into the market. And you could see the opening was just horrific. We had a news event driver 1 hour before. And in here, by the time we came to the open, which is this up close candle, I could just tell immediately that I didn't want to be a part of any of this. And I know my old self, I would have been trying to long in this, doing anything to get to the buy side. And ICT posted in our private group, he was able to go long in here and target the buy side, but I was not upset at all that I didn't participate in it, because looking at the 1 minute, it was a complete mess. There was nothing that I would have done. And I could easily tell in real time where my old self would have been trying to long this, because this was right at the open. I would have been trying to long out this fair value gap. I know that for a fact, my old self, because I could see that we were so close in proximity to the buy side. We had a nice displacement off the open, and I would have been just trying to long this. And then I would have been stuck inside of this range and this weird chop, and then potentially getting stopped out. I would have been like, what the hell? But that's, for me, utilizing experience and everything that I've learned, I was able to set out of it. What I wanted to highlight, I believe, during this day was the macro, which was from 950 to 1010. So we got above the buy side liquidity, and I don't think even in real time I wouldn't even expect myself to execute on this, because the relative equal lows, all the pre-session lows, this would have made me wearied, especially as soon as we got above the buy side, to try to long this again. But we dropped down into this discount fair value gap here, and we displaced away to target that buy side right inside of the macro. So I could see this short in here where I could have viewed it as that, but knowing the narrative, I don't believe I would have done that. Again, I'm coulda, woulda, shouldas, and you know what I could do or couldn't do. It's always going to be unique to the day that you're trading on. There's so many variables that are at play. The only thing that you can really control is your risk. I mean, at the end of the day, you're going to make mistakes even on your own system as well as you know it. The only thing that you can really control is how much risk you're putting on and how often you engage with the market. That's the only thing that you can truly control. And the fantastic thing about it is, if you're able to control yourself, you're able to control how much risk you put into the market. You can be profitable very long term if you do those things very well. Let me look at the chat in here. All you need is exposure to capital and consistent process. Yep. Do you use prices like midnight? No, I don't. I'll look at it in terms of power of 3, but yeah, I just don't personally utilize it as far as like entries. Is this where your daily bias would have played out? Yeah, but sometimes you're going to have a daily bias or a bias in mind that plays out, but you have no entry. There's no criteria to be part of it. And that's where discipline is a bitch. You have to just sit on that idea that, you know what, I have to sit out because nothing's there. I can't just FOMO into the market, because that's going to probably get you killed 9 out of 10 times. And here I covered, if you're coming in off of this is a lunch hour macro. I found this really cool. So from my time, this was lunch hour from here to here. So this is lunch, but this little end of lunch macro was pretty beautiful. So we take out buy side liquidity again, and you see this rapid displacement lower. What is this last down close candle? That is our bearish breaker. So anytime you have a breaker with fast movement, speed, you can expect breakaway gaps to stay there. So like these higher premiums, you may be asking, well, why didn't it retrace back up into there? Well, the breaker's in place, the momentum, the speed, those are all things you need to annotate in real time. That's the reason why it's going to leave it open. Inside of that breaker, there is a small inefficiency here. So we drop off lower, reclaim it again, build up a little bit more sell side, and we're targeting the pre-session lows in here. And then right at this window, right at the macro, you can see it starts spooling and dropping off into the sell side. So you could have been positioned, you can be positioned before a macro, that's perfectly fine. But you're anticipating as soon as that window opens, that's when you should start anticipating speed and momentum towards your target. So you could have been positioned in here or any of these reclaimed. I wouldn't find this as a very high probability short, but we didn't yet take out the sell side liquidity pool in here. So I guess within the macro, you could have entered in the short here, but not a lot of meat on the bone, I would say, to really be a part of it. At that point, you basically missed the best entry, which is up in here. So that was Thursday in a nutshell. I'm very happy with my own performance that day. Didn't do anything because I know on years ago, I even a year ago or 2 years ago, I could have blown 10 accounts in this day, trying to long it, trying to short it, trying to long it, trying to short it, trying to long short. It would have been a complete mess. So that I'm very happy with. And this is how this week was just very difficult, even though I was extremely bullish on the week. A lot of the bullish moves that unfolded were either overnight or into the PM session, where even in here, when we took out the sell side liquidity, we just rapidly displaced higher. And it didn't give much in terms of entries. Not a lot of deep retracements, or really even in here, nothing in terms of digging into a fair value gap on this side. There's nothing. If you dig into a 1 minute, I mean, there's a few opportunities down in here, but I think in real time that would have been difficult to see. I know if Danny's still in here, I know he caught ES on this run up, which was beautiful. Almego, good to see you, brother. Hope you're doing well. Hope you're having a good weekend. Scott, I've heard, yeah, once you see it, you can't unsee it. What does that mean to you, right? Well, I mean, that just means once you see these concepts, once you see them, you can't unsee them. I mean, it's as simple as that. Like, once you see a fair value gap and once you see it, reacting off of it, once you see buy side, sell side liquidity, and you have that paradigm shift from quotation retail, then basically a door opens up for you. You see that, well, it's not all the things that I've been told. And basically it's like a veil being lifted. And for some people, most people now that get introduced to ICT, it's the first thing that they learn. So they don't understand a different way of trading. For me, I started out with trend lines, bat patterns, harmonic patterns, EMAs, a lot of different things that were not, that were very popular at the time, and ICT was not. So if you don't resonate with that, it's probably just because you don't know another way of trading, which is fine. It's actually very good. Hopefully that makes sense. And then today, I already reviewed Friday, so I showed what I could have done better. And in here, when we're rapidly displacing to close out a week, I wouldn't have been long in here. I just let these type of conditions go. I mean, this is something that I don't really want to be a part of, because I don't know if we're going to have some retracement or reversal, especially on a Friday to close out the week. We just closed out the week extremely bullish. I mean, it was a wild way to end the week, And I talked about how the TGIF template, sometimes that doesn't happen because it's spooling towards the draw on liquidity, and you're going to close out the week extremely bullish or bearish. And you can't expect the 20 to 30% retracement back into the weekly range. Trend lines work great. It's all personal, man. I've been through, and this is where I think people that haven't experienced different trading styles, and they say that ICT is the only way, and they kind of just shit on everybody else that isn't on that boat. For me, I've seen amazing trendline traders. I've seen amazing analysts, use support and resistance and EMAs. I mean, I just say do whatever works for you, man. If you find profitability and consistency, I mean, who am I to tell you that you shouldn't be doing that? I just found what works for me and what I like. Am I saying this is the best possible way? In my personal opinion, yes. Um, this is how the market operates. It's an algorithm that operates this entire thing. And whether you want to believe that or not, that's entirely up to you. I'm not going to convince you of it. Yeah, Scott, I mean, if you just go straight into ICT, then I guess that phrase wasn't, it won't resonate or hit home with you as much as it would with me. Hey, man, I appreciate that. All love. Let's go over what questions you guys got. You got anything on your mind that maybe you're struggling with, or psychology? I would really like to focus on psychology if you have that. I mean, technicals I can answer, but hopefully the stream has been helpful in some way and providing some type of value. I guess put a 1 in the chat if you're finding this somewhat useful. If you hear me drinking, it's coffee. That's crazy, that 30-second to a minute delay. I struggle with multi-timeframes analysis. I get tripped up on lower timeframes. Yeah, I think that is just more or less experience. It's not the answer that you're looking for. But the only way to really get over that hump is to constantly just focus on narrative. And what is narrative? Narrative is what the higher time frames are doing. So what are they seeking? It's the number one thing I preach, and I've always talked about this, and ICT does as well. I'm not saying it's an end-all be-all. I can trade without narrative. I can trade the counter narrative. But if you know the narrative and you're very well at predicting the narrative, I think it'll put you on a much better path. So for me, I always analyze from a monthly time frame all the way down to a 1 minute because the market is fractal. But the monthly, weekly, daily are the three major higher time frames. They are the parent. All the other ones are basically children to the parents. So whatever the higher time frames are doing, the lower time frames are going to be submissive to it. So if I can figure out what the monthly, weekly, and daily are doing, then I can go into the lower time frames and I can position myself in accordance to what the higher time frames are doing because they're working in tandem and sync with each other. So for me, going back to your question, how to utilize multiple time frames is I'm utilizing the higher time frames as my guide, as a roadmap, and I'm seeing where they're heading. And if I can do that, then I can go down into a lower time frames, and go into a session, and then I can chop it up with time. So then I'm narrowing it down into time, which is, can I narrow it down into the two macros before the silver bullet and during the end of the silver bullet, or just simply focusing on the silver bullet? Because that will give me a small window of time to plug in my model, which is in accordance to the higher time frames narrative. If I can do that, then my probabilities are much higher. So for me, to your question, that's really the advice that I would give, is focusing on the higher time frames, figuring out where the draw on liquidity is. What is the draw on liquidity? That's where the market is heading. That's the magnet. That's where the price is pulling to. and really just time and experience and spending time with them. I mean, it's a relationship. The charts are a relationship. You have to spend time with them. You have to get to know them. You have to know them very intimately. Like, I know exactly where NQ is all the time because I'm constantly referring back to it. I constantly know where it's at every single day. Do you believe in taking partials? Yes. I think it's the number one thing that will... I just skipped some ads for you. Do I believe in taking partials, Ross? Yes, because you, even this week, I showed an example how sometimes you can have a target in mind, but price ends up never reaching it. And if I never pulled off partials, then I never pay myself. ICT in the old years used to say, pay yourself all the time. Pay the trader, because having that false illusion of perfectionism, or that your trade is going to meet the target, then that's a false sense of confidence. That's a false sense of illusion to me, because you're never 100% correct. And if you believe that, then to me, that again, you're living in a fallacy. So paying yourself is very, very huge. I've been struggling with over trading. I have setups, but I don't wait for them. I jump in and out and just get chopped up. Yeah. So turtlenecks, that's something that everybody deals with. And the way that I dealt with it is minimizing the amount of times I can engage with the market. And if you have to get a third-party thing to cut you off, like a drawdown limiter, I know if you're trading futures, Trade08 has it. I think NinjaTrader, Rhythmic, they all have something to where you can cut off the amount of drawdown you want to have in a day, and it'll immediately block you out from trading. Again, utilizing narrative, utilizing intermarket relationships, which is SMT, dollar index, other asset classes to give you guidance. Those are what's going to, those to me are always telling me when not to enter, when is something that isn't valid. That to me is so much more valuable, because if I can tell when not to enter the market, it's telling me not to do something, then it's perfect. It's telling me don't enter into this market, don't do this right now. It's like, okay, cool, I'm not going to do it. As far as the other kind of portion to turtleneck, that's your own psychology and dealing with tilt, most likely, which is revenge trading. And I mean, tilting has so many different layers to it that you need to personally weed out. I recommend the book, The Mental Game of Trading by Jared Tindler. It's a very, very good book. I struggle with having one bad day and blowing my evals. Trust me, I've been there more times than not. I've punched holes in walls. I've flipped out. I've done everything, man. I've been there. And again, you have to work. I would say you have to work 2 times as hard on your own psychology than you have to do on technicals. Technicals to me is extremely easy. It's always came easy to me. It may not to you, but I think over time it will. The hard part is yourself, and you have to be a master of yourself before you're a master of these concepts. I have a question. Sorry if this is a stupid question. Why is the B adjust on an IQ show? Because the B adjust, that has to be on. ICT, I believe, has a video over this. I'm not sure, but yeah, if you turn this off, it's going to show that we're above all-time highs, which is not true. Do you seek relative equals and relative equal highs? Yep. I mean, liquidity. How do you avoid trades like last you lost? Do you need more information? Sometimes that's, I guess, look at that question in and of itself. To me, I've asked myself this same question before, where, like, how do I avoid it? And even me, I've explained in the video, the beginning of this live, is there's nothing I would have done differently. Sometimes there's just nothing that you could have done differently. There's nothing else that maybe with time and experience you may be able to see that. But really the root cause of that question is perfectionism. And I'm not saying you're asking, you're perfectionist, but I am. And I know when I ask that question, the root cause is perfectionism. I'm looking for perfection. I'm looking basically to never take a loss, which is not true. That is a complete fallacy and a lie. You'll never be able to a point where you'll never take losses. It's impossible. So sometimes you execute on your model and your system and you take a loss, and it just is what it is. You did everything perfectly. There's nothing you would have changed, and that means you're on the right track. You're doing what you're supposed to do. Risk management and control over your emotions will eventually pay you out, because if you can do that properly, then you're going to succeed in the end. I always put risk management, and obviously having management over myself is the number one priority, because those are the only two variables that I can really control. How do you avoid, I already asked it. How much do you risk per trade on a 50K eval? I mean, that just depends on how much the prop firm is giving you in terms of risk. I mean, if I was on it depends. I mean, if let's say it's a 2K drawdown, then I'm trying to divide that drawdown up into at least 15 to 20 trades. So however much you want to risk on that. I only have a little bit left on here, so I'm going to do this just for the sake of it, if you guys don't mind. This is a Google Doc, which I know some people are going to ask for it. I'm going to keep it to myself, unfortunately, because I worked very hard on this. This is my notes over the book, The Mental Game of Trading. So when I read it, I highlighted all the parts that I wanted to put down inside of a Google Doc. And this is just my mentality. I'm a little crazy when it comes to stuff. So I have about 40 pages of notes that I took from the book that I already read and put it inside of a Google Doc so I can keep referring back to it. Do you think it's a safe call to wait until open or news events for a beginner? Yes, 100%. That's why I always put the emphasis during my live streams to wait for the silver bullet. If there's a news event driver, wait for that to play out, because you're not experienced enough to know what's happening. I mean, blatantly, you don't have enough experience, you don't have enough time to really navigate that. And even myself, I mean, I don't like even trading the open, because I think it's highly manipulated, and sometimes I don't have enough information to work with. But in terms of yeah, Scott, IPDA is the name of ICT's algorithm which runs the market. That's the name. IPDA look back is a look back within the algorithm. So please don't get those two confused. I've been seeing that so much, and people keep calling stuff that, like, IPDA is the name of the algorithm. That's I don't know why Twitter that's really triggered me, because people are just, they're so new and they don't know what they're talking about. They're just using buzzwords and stuff. But in terms of look back, I don't even use it. I think some people really harp on it. But for me, the IPDA look back and standard deviations to me are in the same category, where if I can already predetermine where the drawn liquidity is, it's probably already lining up with a 20, 40, 60-day look back. And same with standard deviations. And sometimes the standard deviations and 20, 40-day, 60-day look back aren't even correct. So sometimes you could be looking at that look back and you'd be like, man, it should be going down this month, and it's not, because it's not 100% correct. So to me, I would rather value the narrative and the higher time frame standpoint and where the drawn liquidity is over the 20, 40, 60-day look back. And that's just personally me. That's the way I view it. I know some people absolutely love it. They utilize it. And there's so many ways to skin a cat in this game and with these concepts. So for me, I don't utilize it. I'm aware of it. I know how to use it, but I don't. That makes sense. I think keeping it super simple is very, very key. You'll find your own groove in these concepts. You'll find what works for you. For me, that's just never really been useful. It may sound cool and look cool, even central bank dealing ranges. Those don't apply to futures. So anybody that tells you that those apply to futures, they don't. It applies to Forex. So, yeah. Okay, let me not get distracted. So I only got a little bit of time, and I want to make at least these notes valuable. So the whole premise of this book that opened up my mind to a way of viewing psychology and trading is Jared talks about basically identifying the patterns and the build-up to your emotions. So you're going to see in here, you're using emotions as a signal, much like a trade idea. Negative emotions are the signals to the underlying problem. So I'm not going to go over A to B to C game. what I will do is, this is really a paradigm shift. Is for me, when I used to get super angry, I used to get pissed off that I was angry. So do you see how that amplifies each other? Because I was pissed off that I couldn't control my anger, and I had this illusion in my mind that I had to control my emotions. In trading, it's very different, because we have a frontal cortex in our brain, and once that's overran, basically you become just like, you're in a phase, you're in a daze, because that frontal cortex in your brain is so powerful that basically you're dazed into whatever emotion that is. And the key thing is recognizing that build up to the emotion before it takes over you. Because if you're not doing that, that's the real problem. So controlling your emotions is not the answer. Rather, we strive for resolution, meaning you have corrected the performance flaws causing your trading errors permanently. So the focus is not controlling the emotion. The focus is coming to a resolution where I can recognize the buildup of the emotion. I can actually figure out why these emotions are coming up. It's not just always losing or money. It's a lot of different things that, cause us to lash out. Let me go over a couple good notes in here. So this is huge. I even have this in front of me. Be like a detective, eager to gather up clues and curious to understand what they mean. So when I first began this book, I would have a notepad next to me, I would have a camera on, and I would start to journal, and I would go back and review, what was I doing? What was I thinking? What were the things I was saying out loud? What were the kind of tendencies? Was I leaning forward? Or my hands sweaty? What was I saying? What was I thinking? Because there's a lot of common things that you're going to continue to keep doing for a certain emotion. And what you need to do, once you have enough evidence and once you've detected enough, you create a map. So there's going to be different levels to your emotions. So there's going to be, like, for tilt, for me, for an example, is I'll have just a little thought in my brain where if I lost a trade or if something didn't go my way, I'm like, why the hell did that happen? And it's just those little subtle things that will start to build up. So there's like a level 1, level 2, and then a level 3. You're basically in danger zone, because as soon as you're at level 3, you're on full tilt mode, or you're in full fear, you're in full greed. Those type of things, you need to catch it at level 1. And if you're able to do that and you're able to cut it off, that's where you're making real resolution, you're making progress. But if you get up into that danger zone, and once your emotions have taken over, then it's game over. All your demons are going to come out, all your bad habits, and that's it. It's wraps. So creating a map, how to actually track your emotions to map them, by noticing, examining, and writing down what's going on before, after, and during your trading mistakes. So just as I discussed, that's what you're doing. You're creating a map. Accumulated emotions are huge, especially for tilting and people who revenge trade, because you may not feel a lot of tilt or anger before a session, but something might trigger you, and then a memory pops up where it triggers you even more. And that's because of last week or the week before, a month before, where you lost a lot. It's a lot of accumulated emotion that's built up. And usually those are the days that you blow your entire account out, because it's all this accumulated emotion, and then it just bursts out into your trading. And this has happened to me countless amount of times. So you have to be diligent throughout each week in solving those little things that you may not think are major, but kind of just going through that emotion and figuring out why that happened, and resolving that issue. That way it doesn't become accumulated over time. Does this make sense to everybody so far? I know it may be a little confusing. It was to me at first, but just put a 1 in the chat. Make sure I didn't lose anybody. Cool, cool, cool. Very studious of everybody. Okay, so here's some examples. So this is how you start to journal. And what are you journaling? What am I supposed to be looking at? Well, there's certain thoughts, emotions, behaviors, actions, changes to your decision making, changes to your perception of the market, trading mistakes. So if you're trying to examine kind of your map and what I'm looking for, majority of the time you're just focusing on thoughts, behaviors, and actions. So they're kind of the same thing. Triggers. There's certain triggers and things. For me, sometimes I'm perfectly fine, and then I'll take a loss, and that's my trigger. But sometimes, even before I take that loss, there's certain triggers and things that are coming up even before that loss. So look at your triggers before a trade, during a trade, after a trade. Um, there's about 5 different emotions that he goes over that he believes that are the most important in trading, which is fear, greed, confidence, anger, which is tilt, and then confidence. So each chapter will go over each emotion. Um, Primarily, I know the two that most people deal with are FOMO and tilt. Especially for me, I've always dealt with tilt. That was the number one thing that was basically my crutch that I couldn't get over for the longest time. And I still deal with it. There's still times where I want to tilt, and even on stream yesterday, I was pissed off. But you can be pissed off, but not let it come out in your trading. And that's where you're de-escalating the emotion. Even if I'm on live stream, I'm still thinking some thoughts like, okay, um, let it be. There'll always be a trade tomorrow. There's one trade does not make your career. These little things that I just said, I have note cards in front of me, and they're specifically tailored to my tilt. They're things that I've kind of weeded out. So for me, just letting things go, understanding that one trade doesn't make my career, um, things like that. Those type of phrases. So let's go over some good notes. Let me see. What do you guys want? You guys want fear, tilt, or greed? Because I'm only going to go over one before I got to hop off. All right, so we got two. Oh boy, we got 2 and 2. 3. All right, so we got 2B2, B3. Okay, it seems like greed. All right, let me go over greed, and then I'll go on to tilt. So for greed, I remember reading this is the first, I believe this is the second chapter. Well, it's chapter 4, but the second emotion he talks about. So I found this exact line, and I repeatedly keep coming back to this. I've never had a problem with greed. That's just me personally. All of us are going to have different emotions that we deal with personally. Some may be more exaggerated than others. Like I said, personally, it was me with tilt, but some people it's with greed. So the solution isn't just to be less greedy. That's like saying to be less ambitious. So he says you'll find the roots of greed lie in the flaws, biases, and illusions that cause fear, anger, overconfidence, and a lack of confidence. Most often they lie in overconfidence. So it's really ironic. A lot of these emotions actually have to do with another emotion, which may sound confusing, but most of the time, you're not greedy, you're just overconfident, right? So most often, your greed lies in overconfidence. Overconfidence is a fuck it mentality, blind faith, and being blind to risk. On the flip side, if greed comes from a lack of confidence, you feel like nothing is ever good enough, no matter how much you make. So do you see there? It has to do with confidence rather than greed. It's coming from a stance of a lack of confidence where you don't feel like the profits that you may have had is not good enough. And that really resonates with me. If I ever feel like the trade isn't good enough, you have to figure out, why does it not feel good enough? So this is where you have to do your own due diligence and say, why does these profits, why do they not ever feel good enough? Revenge trading, epitomized by the intensity that follows a string of unlucky losses. So you'll end up chasing price and justify a worse price because of the opportunity still feels right. Aside from FOMO, the fear of losses, mistakes, and failure can all drive actions that appear greedy. Greed actually costs you money. So that's a good quote. Greed is the emotion. Oh, this one's great. The greed is the emotion that indicates the point where your ambition becomes excessive. So really read that and take that in, because if you can indicate the point where your ambition becomes too excessive, then you can cut it off and it doesn't become excessive. The actual definition of greed: a selfish and excessive desire for more of something, such as money, than is needed. Greed is the emotion that indicates the point where your ambition becomes excessive. Yep. Um, I think we just read that. Maybe I put it twice. If there is a drive to achieve personal glory above the aims of one team, so once you start to put your own achievement and your personal glory above your own trading plan, the things that you've set out, or a need to prove to the skeptics that they deserve to be classed as a professional, then it is likely that the level of greed has affected the decision. So as soon as you try to achieve personal glory over your trading plan, that is an indication that you're being greedy. Ask yourself, where does ambition turn into greed? In the heat of the moment, your drive to make money supersedes that logic, and it is difficult to know when and when not to curb that drive. So in here he says the goal is to correct the underlying flaws, illusions, and biases that turn your ambition into greed. Then you can drive yourself as hard as possible, knowing that you'll automatically make decisions within your strategy because you know that's how to make the most money in the long term. So you're correcting the false illusions, such as, um, you know, these profits not being good enough, or you think that you're actually better than your skill set. Identifying when your ambition becomes excessive, when that exact moment is. When ambition reaches a point where decision making becomes compromised, that's greed. So greed ignores risk and seeks to earn money without reward for edge, strategy, or system. So this will go on for a while, but hopefully that's given you some insight to your greed. And you can see that this is, to me, it's such a contrary way of looking at psychology compared to what everybody else tells you to do. Because most psychology books tell you that not to be greedy, not to revenge trade, not to FOMO, but that's basically saying don't think of an elephant. I think that's one of the terms. Like, if somebody tells you not to do something, you're probably going to do it. So that doesn't solve any of the issues. You have to solve the underlying things that are causing that issue to rise, right? So to me, this book, when I read it, I was like, holy shit, like, this makes sense. Like, I haven't read anything like this. Over the next few weeks, examine and capture the signs that greed has become a problem. Also, be sure to spot the things that trigger greed, such as winning, string of losses, or sensing a monster opportunity. And then you're going to map and order, those certain triggers and things. So let's dial into Tilt. Brother, do you have a Discord server? No, I do not. Everything is free. Eventually, yes, I'm eventually going to do some paid service at one point in time. I don't know when that is going to be, but I think providing value in a service to other people and showing people what you can do and the value that you hold first is important. And if they deem that valuable, then they can obviously, invest into you. So that's what I'm doing. I'm showing you what I can do and what value I can bring. And if you find that, valuable, then of course you can invest into, myself. And if you don't want to, I put out enough information for free to help you. What is your opinion for the book Trading in the Zone? I read that in my first year. I think it's a great book for beginners, but again, that's one of those books that tells you what I just stated. It's this book I'm giving the notes on is so much different than everything I've ever read, because everybody else tells you what not to do, and you already know that. And it made me upset all the time. It's like, all right, don't tilt, don't revenge trade, don't anger. It's like, well, none of that's solving the issue. Of course I know not to do it, but it's not solving the issue. And that's what this book did for me, is it resolved a lot of the issues I was having. All right, so anger. Anger builds up steadily throughout the trading day or over successful days until the accumulated reaches a boiling point. Explosions come out of nowhere without a warning. Um, Even myself, this is a note. For some, my self-quotation, they get quiet, tenser, like a pressure cooker about to explode. So that's another thing you can note is, do you get quiet? Do you get really tense? Do you start leaning forward, sweating, heartbeat increasing, etc.? You never get angry at randomly. There's always something specifically that triggers it, which is really key. List of trigger tilts. Click too many trades out of frustration. Think, fuck the market. This is bullshit. You've got to be kidding me. I can't believe my luck. Forces trades. Trying to recoup losses. Deviating from your strategy. Taking a bad setup that you know is wrong. Chasing the market. So this first paragraph was like the huge light bulb in my head that finally I was like, okay, this makes sense. Anger is the signal, not the real problem. As I discussed before with anger and tilting, I always thought that was the problem. I was like, man, I have to solve my anger. But anger is not the problem. Anger is produced when underlying flaws, biases, and illusions conflict with reality. So essentially, you're fighting against the performance flaws that he's talking about in this book, such as believing you're unlucky than other traders, knowing that you should never make a mistake or that you should know what's going on. So basically, you're fighting false illusions with reality. So what you're doing is you're fighting to prevent the flaw from causing you to overact. So, however, when the source of the conflict is unknown or unidentified, frustration starts to build up and can turn into anger. Anger becomes the signal of the real problem. So that triggers the tilt of the tilt. Essentially, you're angry because you're angry, being pissed off that you can't control your anger, tilting because you took a trade that you would never take in the right state of mind, or tilting because you have no idea how to fix your tilt problem. This is exactly what I dealt with. I was tilting because I was tilting. I was mad because I was mad. And that's what everybody else tells you to do, is to not be mad. It's like, well, I can't not be mad. I'm pissed off. Like, screw you, man. I can't figure this out. So, the secondary anger is like throwing gasoline on a bonfire. And that's really what was happening. Anger can go unresolved for weeks and even years. And if you ever tilted instantly, gone from feeling calm to bomb going off in your mind, it's because of accumulated tilt. What I directly talked about in the beginning. One of the hallmark characteristics of anger is your mind being so fixated on something that you're unable to let go, even if it's to your own detriment. You see this most commonly when you're fixated on a specific outcome or past mistake. Let me see in here. So be clear on the things your mind tends to fixate on. They become signals for you to wake up and realize that your anger is putting your mind in a state of paralysis without you realizing it. When you spot that signal, have some physical action that you take, such as a deep breath, standing up, to reinforce your awareness before you start correcting the anger, something that has to change for your mind to start letting go. So having physical reactions to the anger, such as walking away, deep breaths, saying things out loud, are really going to help you. I think that's going to be it. I got to go. I got to do a few things. But this whole book, I cannot recommend it anymore. I mean, I don't know if this is going to be some type of copyright, strike or anything. I mean, it's my own notes from the book, but I highly recommend the book. I can't speak highly enough about it. As you can see, even through the notes and the preview of it, I mean, it's very, very unique in and of itself. So that's my Saturday in a nutshell in terms of journaling and going over even psychology and reviewing what I could do better. I always go over these notes just to kind of refresh my mind. Appreciate all you guys tuning in. I know it's a Saturday, so until Monday, I'll be live streaming. Good luck and good trading, everybody.